Please subscribe to our channel and press the bell icon to never miss an update from TBC.
Welcome friends to another GST session at Dinesh Batra and Company. Today we will not make it very formal legal session. Rather we will be talking about something very interesting, something very important, which will surely increase your income. Yes friends, you heard it correctly. By the end of this video, you would be aware that how your hard-earned income is being wasted because of your ignorance or lack of awareness. So please watch this video till the end. We assure you that these tips will surely help you to save some additional amount of money. Friends, all our viewers who were registered in the erstwhile VAT regime are fully aware of the concept of VAT input credit. Now this VAT input credit was available only on purchases. It was not available on the other items of inward supplies, which is the case now. So few of our dealers have sort of carried over the same principle even in this regime. They ensure, and they are fully aware of, and they ensure that full ITC is claimed on all the items of their purchases. They ensure that all the taxes which they pay on purchases is taken a credit off. Now let me remind you here friends that in the GST regime we are eligible to claim input tax credit not just of purchases but also of the GST which we pay on all other items of expenses that are lined up in our profit and loss account. Input tax credit is also available on the GST which we pay on purchase of fixed assets or on purchase of capital goods which are used in the course or furtherance of our business. Further, let me just make a mention here that input tax credit is also available on the GST which we pay on the reimbursable expenses which may have been incurred by our suppliers on our behalf. So on all these items, input tax credit is available, friends. So few amongst us are still not claiming complete input tax credit on all these items. As a GST consultant, we have identified that because of these 4 reasons primarily, the clients are not claiming input tax credit properly. Reason number 1 is delay in receiving of invoices. Friends, it is quite a common practice that occasionally you receive an invoice from the vendor quite late. You are having good relations with the vendor, you are making regular payments on an ad hoc basis, you are availing credit period, and in this process you forget to book the invoice well in time without realizing that you are losing on input tax credit. So this delay in getting the invoices is one of the reasons of not getting the legitimate ITC. Reason number 2 could be ignorance, as we just discussed, that our old VAT dealers are still in the habit of taking inputs only on purchases and are ignorant that they are eligible under the GST regime to take credit of other items also, on all inward supplies of goods and services. Reason number 3 could be oversight, like again because of our habit, we at times do not read the fine print in few invoices. For example, the biggest example that comes to my mind is that of an MTNL bill. When you get a bill from Mahanagar Telephone Nigam, what you look into is the amount that you need to pay. You don't see that in certain vertical or horizontal columns they have shown how much GST is charged. They have incorporated your GST also in that invoice, but because of the regular practice, you out of oversight, you just overlook that important ITC. And the most important reason, friends, which we have identified is the hidden credit. Now, let me explain what I mean by hidden credit by means of an example. It is quite common for us to have a bank statement at the end of each month. What we normally do, friends, is that we quickly reconcile our bank statement. We reconcile all the payments with our checkbook counterfoils. We reconcile all our receipts with our deposit pay and slip books. And whatever remains unticked normally is the bank charge. And we just ask our accountants to book the bank charges, and the matter is done. We are happy that the bank statement is reconciled. Now here where we need to be cautious. Now this element of bank charges has a component of GST to the tune of 18%. Each and every bank charge that appears as a debit in your bank statement has an element of 18% GST, which is claimable as an ITC. Now you may ask that your GST consultant has told you that one of the prerequisites for claiming input tax credit is to have a tax invoice, and for the bank charges obviously you may not be having a tax invoice. So friends, here you need to be aware of the provisions contained in Rule 54.2. 54.2 lays down that banking and financial institutions can issue you a consolidated tax invoice or any other document by whatever name called. Now this document may be delivered to you physically, may be delivered to you electronically, maybe with or without any serial number, maybe even it may be with or without your address. So a lot of relaxations have been given to the banks on this account. So even without a formal tax invoice from the bank, you are eligible for claiming input tax credit. Now think of a scenario where you have a flourishing business, you have enormous banking transactions, you are availing a lot of banking facilities like overdraft limits, CC limits, bank guarantees, so on and so forth, and you're paying a decent amount to the bank in the form of interest and bank charges. Now just calculate that 18% of the actual bank charge is hidden within that debit that appears in your bank statement. Now this can be huge in a few cases. So let us be aware of all these legitimate claims which we can make, and this will surely reduce our tax liability. So friends, we would end our video by requesting you to discover this hidden credit. Talk to your accountants, talk to your GST consultants, and ensure that they get you the total eligible input tax credit. Ask them that the government has made available on the GST portal form, which is Form 2A. You can download that form. It lists out all the eligible input tax credit which is available to you. Please ensure that whatever is legitimate, obviously you have to take into cognizance the provisions of Section 17(5), which talks of blocked credit. Other than that, every credit that appears there, you are eligible to claim a credit against your tax liability, and this will surely increase your cash profits. So friends, with this, we'll end this video. If you've found it informative, please like it. You may share it with your accountants and with your GST consultants. And please do not forget to subscribe to our channel to get such regular GST updates. Thank you so much.